Ọzọpụ adị n'ito.
What's that?
Avide top 25.
What's the meaning of a talk? You mean buy?
Yeah, like it's buying.
Oh, okay. This is my projection. See the screen. Do you see the screen?
Yeah, I see it.
So imagine if it's I'm looking at up here.
We hit food. Yeah, because around that level, guys, around 120 something.
But let's look at here to take this is a valid resistance. This level is a valid resistance, so there's a likelihood it might react here. So let's target there for now. And then here, but I'm looking at eventually up here as TP1 for there. So, but
Okay.
we'll look at what happens when it hits here, and also here.
Mm,
Yeah, so for now, let's see if it hits this resistance here. This is 30 minutes chart. So let's see. But New York session just opened. I'm waiting for the first 30-minute candle to close so that this is USD JPY. No, this is what we analyzed last week. Um, it hasn't been able to go into the area of interest up. That's the line up here, but it looks like it's want to sell. Um, maybe it will go, maybe it will not go, but it looks like it will want to drop from where it is. I was trying to buy yesterday, but if I think it has a negative relationship with Euro USD and GBP USD. So, um, USD JPY should be weak when the GBP USD Euro USD is strong,
mm,
when the pounds and euro is strong. Um, Yeah, so I think that's why it's struggling to go up because um we can see that GU 4 hour time frame. Yeah, we can see GU is strong. Like it's trying to push up after this whole sales. But let's analyze quickly and then see once the first 30-minute candle closes, we'll see maybe it's better to wait for the first 1 hour candle to close and we will see because I'm anticipating a quick manipulation down into this block here so that we can buy. Though the alert that I have set for us to buy is when price is above 1.6. What's the price I put in the group? 1.1.
1.3169.
Oh, Bright is here. 1.6. Yeah. So this is the, do you see my screen? Do you see the alert? This
Yeah, I
the
can see your screen.
Yeah, but do you see the alert on the chart? This is where the alert is. It's like a line here.
Oh, okay, I've seen the line.
Yeah, and you can see that price is above it right now, and we have the 30 minutes body rejecting. I mean, this bearish candle preceding New York Open swept through it and closed just above it. And then the next candle was a doji, and then this New York session open 30 minutes, first 30 minutes candle is above it. So we have a valid, our entry is valid right now. That's from here. Okay, so if you set if you had set a buy stop, you are triggered. But I'm also seeing the utility in um like price manipulating a little bit inside the 1 hour candle because this is 30 minutes back into this block. Okay, before rejecting up, staying above here, and then we can target this area first and then target, I mean, keep moving up. But I'm going to explain why I'm looking at buys on GU and then EU, like EU. And then why there's a likelihood that gold is going to start forming a bearish reversal pattern. So let's monitor a little bit. We are above our buy entry, but let's monitor a little bit to see what is going to happen. So let me take this off because I want to clear the screen and do a fresh. Maybe I will not take it off yet. Maybe I'll open a new GU. So you see, this is the gold. So first, let's quickly look at gold. Okay, let's look at gold real quick before we move to because I might not trade gold today, but let's look at gold real quick. So first, we can see clearly. Okay, so what do you see here on gold right now? Okay, so let me move to let's say 4 hour time frame. This 4 hour time frame. Okay. Um, let's go to daily time frame. This is the daily time frame. And this is what I wanted to see. I want to see a daily time frame push up and rejection. So this daily time frame, this today's candle, okay, if today's candle drops down to close somewhere here or below this trend line and this PSR, if it closes here or if it engulfs at least the yesterday's candle and even rejects up, then tomorrow's um price action, okay, we would expect that to form is it evening um what is the name of the pattern?
Is it Morningstar?
Yes, yes, the one for sales, Morningstar, yeah. So we have a big price is moving up. We have a big bullish candle. We have a doji or anything we have a doji or we have a small bullish bearish candle form, and what we have a rejection, and then we should look for another bullish big candle somewhere here, and that will form for us the you said Morningstar, right? Or
Yeah,
Evening Star. Good. Which one is the Morningstar? Which one is the Evening Star? The one for
the
sale is what?
morning, the sell. Yeah,
The one for
the
sale
sell
is
is the Morningstar.
Morningstar. Okay, good. So Morningstar, great. So we need this pattern. Okay, then we will be okay. That's the first thing I would say here. Without that pattern formed, we can't do anything because this might engulf down here, but it will reject. It might engulf into the into the low of the open of yesterday's candle down here where the trend line is, but it will reject off. If it doesn't reject and it closes there, the next candle or tomorrow's candle will push up to retest this before, and then we should expect that to all reject before we'll be safe to look for sales, like to be able to hold sales, like the way people have held on to buys on gold for like I think 3 days now since Sunday, since the market opened, since this week, it's just been um trading up. Okay, so that's one easy thought. But I'm looking at gold from this point because I'm not going too back, okay, the history, but I'm looking at this point where we can see price breaks structure here. And I remember when gold was doing this, it was just doing up and down, and then we're waiting for breakout. That breakout happened, and I couldn't also follow gold to be buying. Yeah, but look at after the breakout here, look at the way it moved up. Very massive, strong. A lot of people enjoyed it. Yeah. So I think it's time for some kind of a pullback or retracement now. But um, if you look at this range here, we have a valid reference low, we have a previous high that is taken out, and we have a valid reference new high, which is here. Okay. So when we see this kind of formation, we know there is a break of structure to the upside. Okay. So when you use your Fibonacci to measure this structure, you can monitor any pullbacks because the Fibonacci is used for measuring pullbacks. Oh my God. Please keep an eye on GU for me, whether if it keeps going up or it's trying to drop, and then give me updates as I talk. Um, so we have price hit this place. The pullback was 61.8%, which is a valid pullback into exactly sweet spot of discount. Okay. So we got that discount price, and then which is somewhere here. Now, because price broke out this high, we got a breakout here. This low has also become an important reference low here. So we will have to wait until price gives us a very clear indication that it wants to do some kind of a major pullback. And seeing this, if you look at as gold is moving up, we don't see multiple daily candles. Here we see two, sorry, bearish daily candle. Here we see two, I think one here, and then one go up. Now we see 1, 2, 3, 4, like about multiple bearish candles, daily bearish candle. This is telling us that there is some kind of a major drop that is up, that is cooking. Okay, that is about to happen. So the moment you start seeing that, you have to pick price from your most current reference low that has broken a high, which is this low. So you pick your fib from here and then you measure up to the top. This is what I would do typically. Now, when you do that, we can see that this pullback came right into 23.8%, pushed down a little bit, rejects up, stayed there, dropped back to 38.2%. And from there, price pushed up and is above 23.6%. Okay, so one thing I've seen about when I do measurements on the fib is if you are measuring any range, let's say if price is you're expecting price to fall, before price falls finally for you, you should have price stay below 23.6% in order to fall. Okay. And if you're expecting a bullish move, a price should be above 23 because that one you flip measure the range. Okay. So price should stay above 23.6% in order to buy finally. Now we are above it. Okay. So 1 point. Being above it means that we are trying to go bullish. Okay, but we should be below it to be safe for a drop. And if we are below it, the sky is the limit. We might get another test of 38.2% or even straight to equilibrium, 50%, or 61.8% straight. But I will anticipate 50%, which is equilibrium, because always price will want to give a fair price first. So price has been moving up inside this range. Now it should give a fair range. It should give buyers the opportunity. Okay, like it should drop down and give people a fair price so that they can participate in the buy, because the price is becoming too high and people don't want to be buying at high prices all the time. They want price to become low or be fair, then they can also participate in the buy. So we should expect price to drop to 50% equilibrium and then get a pullback into making another double top. If this move up fails to break the highs or even breaks the highs and quickly drops down to stay below the all-time highs, then we will have a very big move to 78.6%, which is retesting the breakout here. Okay. So once price hit equilibrium, if it goes up and gives us new highs and keep going up, that's okay. But if it comes here and rejects, okay, if it rejects, it's going to drop to retest the breakout of this move. Perfect. So let's see. This is just a general kind of overview. But for me, if I'm seeing a pattern like this form, what I will look for first is there any reversal pattern being formed? Because now I'm seeing that there's a likelihood we might have a retracement to at least equilibrium. So if we might have a retracement to equilibrium, is there any pattern forming? So the pattern I like most is the head and the shoulder pattern because that is a reversal pattern. So I want to look for a head and a shoulder pattern. Okay. For head and a shoulder pattern, you need 3 points. You need it's just like the morning star. Let's say in a bearish situation, if you're expecting a bearish move, it's just like a morning star. So you need 3 points. Um you need a high. It could be a lower high. It could be a lower high. You need a high. You need a higher high. It could be here. And you need a lower high. Okay, good. I hope you guys are following. So for head and a shoulder pattern, you need good. A high, a higher high, a higher high, and you need a lower high. And your head should not be taken out, or the higher high should not be taken out. Okay, so what does this mean? Okay. Um, you know the morning star formation, like that we are looking at here. Most times you would have price giving you a high, and then the doji will give you the higher high, and then you expect the other candle that will engulf be give you a lower high. Sometimes it might want to sweep liquidity above the doji before it drops, but it will give you like a lower high. It's the same pattern. Okay. But for the head and the shoulder, this is now a group of candles that have joined together to form the pattern. Okay. So you need something like this. So here is your head, your left shoulder, head, right shoulder. Okay, and the head and the shoulder has a trend like a neckline that you can measure or find diagonally, the diagonal neckline. Okay, which can also be a trend line, diagonal neckline, and it also has the horizontal neckline, which is the left shoulder's low. That will, in a bearish situation, that would be support. So if the head and the shoulder is going to work, you will need the diagonal resistance or neckline to be respected, and you will need the support. In a bearish example like this, you will need the support to also be broken. So the support must be broken, okay, for the head and the shoulder pattern to play out. Let me take a screenshot of this pattern. It looks very nice. I've not thought of it this way before. So let me quickly see what is happening. Okay, so this is GU. Okay, so the first 30 minutes candle close, the second one is open. So let's still wait a little bit and see if it will drop to the area of interest on here, or it will stay above our main entry. Okay, we'll definitely participate. And let's just see if there will be manipulations first. Because yesterday gold did that and it nearly worried me, but I was strong. Okay, good. So this is the pattern we want to see. I want to see if I'm looking for a reversal. Great. So let's get right to what do we see on the chart on gold now. So let's go to 4 hour to see. Good. So on the 4 hour, I can see that I have, and you can draw it from any point, okay? But you just have to find an important reference high, okay? An important high that you will use. So I have a high here and I have a low. Then I move up and I get a higher high. Then I drop to make this area. You can see that if when price touched here, it falls exactly into this diagonal trend line that is respected, okay, which is resistance. So price hit here, moves up again. It should have given us a right shoulder. It gave us a small right shoulder. If you go to 1 hour or 30 minutes, you find a small right shoulder here, but the right shoulder is now invalidated and we get a double top. This means a double head. So sometimes you can get a double head. So we have a head. Now, after that, price drops to retest this area. Okay. So I can see different, like this is also this high here is an important high, but I'm just measuring it using this one. This external one. Okay, this one here. You can choose to use this. You can choose to use this, but I'm using this for now. Okay. So and I see I can extend this if this or this is the head, I can extend this to when price touched this place. When price touched this place and rejected and closed. Okay, good. Now it touched here, then it made a small right shoulder here. Then price dropped back to break. So you can, if you put a trend line here to guide the uh the diagonal, that the resistance, as I was showing in the example, you can put a trend line here to guide it. Okay, good. So we need that trend line to be respected. We need that resistance to be respected. But price drops here, went up, and then dipped down to break. So this is the support. Okay, the support. This is the support. This whole place is the support. Okay, so price drops to break the support. Now it moves up, go up, sweeps the. This is an initial right shoulder. Price moves up and takes it out, which I will call liquidity grab or hunt. Good. So now it forms for us a new right shoulder, or we expect a new right shoulder here. Okay. Now we must stay below this resistance up here, and we must break every diagonal resistance, every diagonal support. Now, as price is falling, it is going to face supports. Any diagonal support or horizontal support, we must break it. If we are able to break this diagonal support here, and we break this horizontal mini support inside here, and break this big main support for the head and the shoulder, and come below the support, we are only going to retest it. We are going to retest it if we are able to break all the support here, then we will retest the support to drop into that equilibrium. Simple. And the only thing that will give the confirmation is when we are able to see a morning star formation or pattern formed on the daily time frame here. We need the daily time frame to give us a morning star pattern. Once we get that here, the expectation is for price to break this support, break the main support here, down here, retest it, and then we aim for equilibrium. As we saw, I showed you earlier on the fib. Are you guys getting the logic? Are you guys getting it?
Yeah, of course.
Yeah.
But just a quick one. It's rather the evening star that is the bearish one. It's
Perfect.
rather the evening one.
Okay,
Yes, so
thank you for that correction. I always mention, like, I mean, I
the
interchange them.
same.
Yeah. But at the end of the day, we know what you're talking about. So
Exactly. Yeah.
good. So this is the logic that I'll be looking at on the head and the shoulder. Now, the only way that we are not going to fall right now is if we drop and this support is respected. If this support is respected and we don't break below it, then we are going to move up to sweep this high again. But as long as we don't take the head out, we are perfect. We are still okay with the head and the shoulder. Do you understand this logic too?
Yeah, we do.
Good. So if we drop into the support here and we don't break it, we don't engulf it, then price will target this right shoulder again. We've taken the first right shoulder out, making a second right shoulder. If we drop into the support and we don't break it, it will move up to break this. And then once it breaks it, the next target is the head. So two things that I've been seeing. If your right shoulder is taken out, there's a higher likelihood price will want to target the head, or price just want to dig deep into deep um premium. Okay, so deep premium is like, let's say if I measure this range, because this range is valid because there's a break of structure to the downside. If I measure this range like this, deep premium is either 100% or 88.6%, or anything above 78.6%. Now we are inside 61.8%. We are at 61.8%, which is a sweet spot to sell and to expect a new low. But if we fail to get a new low, then price would want to go up and target taking the 61.8% out and then going deep into premium. Okay. But if we get to premium and it reverses, good. If it doesn't reverse, what I've seen is that sometimes price might want to sweep, because like this double top like this is all liquidity. Price want to sweep it out, and then what you used to know that is hunting the liquidity above it takes it out and quickly drop to close below and stays below. So this will now become like a resistance. Okay. Once it breaks it, it will become support. Once it drops down to break the support to it doesn't hold as support and it breaks it, it will go up and use it as resistance. And this is where we will see the fall. And this fall is going to be big. A similar thing has happened on BTC. If you guys do see the BTC chart, let me show you BTC on 4-hour or daily time frame now. Look at BTC. Have you seen it? So this is BTC, where BTC cleared that double top. Even here, this top cleared it first time and quickly dropped to be below it, and boom, sell. And then price go up again. You see, when he did that, you see the sell. The sell, it came down to take this low. That was a very big move. Then the second time, it went up again, sweep those double tops, dropping to stay below and retesting. It was used as resistance. Boom. The next target was, it still took the low that this one has made. Okay, now I am anticipating BTC to correct itself. Anything, once it crosses this my trend line, anything here, this is called free traffic. Okay, this is called anything for you. It's only this resistance that might worry, but if it takes this resistance out, boom. And I have set a sell alert up here, because this resistance here should be respected. I don't think it will be, but yeah. So this is it. I mean, this is a clear and a quick way for you to view the market. I mean, put your strategy or whatever you're doing away and just view the market, because this is pure support resistance. Okay, the market is looking for where it can find support, and then also places that it needs to be resisted. If you think in that terms, it's just like price is buying, 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 buying. When is it going to now sell small or give opportunity for sellers? Because it is sellers, buyers, sellers, buyers. Okay, so then it should give opportunity for sellers to also participate in the market. So if that opportunity is going to be given to sellers, then we will anticipate a reversal. So if you are someone who is in tune with reversal trading, head and shoulder pattern is your friend. And then also support resistance, or let's say demand supply, is your friend. So this is my overview on gold. Gold. This is my overview on gold. But so for now, I will need price to stay. We will need a break of structure now in order to participate in the sell. Okay. Because we have to wait for the daily candle to close. We have to wait for the pattern to form. But on the smaller time frames, we can still expect to have some trades taken, though those patterns have not formed yet. So let's move to 30 minutes. The meeting might close maybe a few minutes. I will send a new link quickly so that we can continue for the second session and we can take our trade. Let me see. Okay, so you see the next 30 minutes is trying to retest or push down. So let's see, let's be patient. Okay, just set an alert, go to 30 minutes time frame on GU, target this order block here, and then also be looking at where the alert is 1.136, is it 36 something? Yeah, I've forgotten the price. Just target
One.
it. As long as price stays above, we should be looking for. If it doesn't drop down, fine. We will still be looking for buys. But at least it's better to wait for the 1 hour candle at New York session to close. Then you know that if there is going to be any manipulation or any news, anything, it has done its job. Okay. Then we will be okay to move in the direction. But in the second session, I will give an overview of why I'm projecting a buy, and not a small buy, but a big buy on GU and EU. So quickly back to gold. We will need a break of structure on gold. Now price is hitting 61.8%, but we will need a break of structure internally on either 15 minutes, 30 minutes to be able to participate in mini sells. So the trend has been bullish, but we know that it is trying to form a right shoulder, okay, from the analysis we've been doing so far. So we will need a break of structure to be able to participate, okay? So let's see on this 30 minutes, do you see any break of structure? What is the last important high? Let me even go to 15 minutes. Because where price hit is important, 61.8%. There is still some room for price to travel into the trend line here, but the resistance up here. But let's see if it will do that. But for now, I can see the last important